Good evening, and welcome to AJP's Northeast Asia Market Close. Today was not just another down day for Asian markets. A global semiconductor sell-off swept across Northeast Asia after fresh concerns over the sustainability of AI infrastructure spending triggered a sharp wave of profit-taking in chip stocks. The global sell-off in AI and semiconductor stocks intensified across Northeast Asia after concerns emerged that hyperscalers may have built more computing capacity than they need. The overnight collapse in US. Chip stocks spilled directly into Asia, sending Korea, Japan, and China sharply lower. But even though all three markets fell, investors punished different parts of the semiconductor ecosystem. Korea's memory champion suffered the heaviest selling. China's domestic AI hardware names collapsed. Japan's semiconductor complex was hit across the board, while banks stood out as one of the few pockets of strength. One global AI shock, three markets, three different weak links. The KOSPI closed down 7.89% at 7,648.09, one of its sharpest declines this year after triggering a sell-side sidecar shortly after the opening bell. The index briefly fell below the 7,800 level before recovering part of its losses, only to weaken again into the close. The catalyst came from overnight losses on Wall Street. Meta's plan to commercialize excess AI computing capacity fueled fears that hyperscalers may have overbuilt AI infrastructure, triggering a broad reassessment of semiconductor valuations. The Philadelphia Semiconductor Index tumbled more than 6%, and the selling spread rapidly into Seoul. The damage centered on Korea's AI leaders. Samsung Electronics plunged 9.06% to 286,000 won, while SK hynix sank 14.57% to 2,187,000 won, as investors aggressively took profits after this year's extraordinary rally. Even SK Square, which had recently outperformed thanks to its stake in SK hynix, dropped 13.2% to 1,525,000 won. Although banks and airline shares attracted buying during the session, they were nowhere near large enough to offset the collapse in semiconductor heavyweights. China also joined the regional sell-off, though for a different reason. The Shanghai Composite fell 1.56% to 4,048.41, as investors dumped many of the market's AI hardware leaders rather than rotating into defensive sectors. Cambricon Technologies, China's flagship AI chip designer, often called the country's NVIDIA, plunged 8.1% to 1,365 yuan. Foxconn Industrial Internet, a major AI server manufacturer, dropped 6.94% to 65.14 yuan. Shandong Zhongji Electrical Equipment, another AI infrastructure supplier, lost 6.28% to 1,146.42 yuan. Unlike previous sessions, there was no meaningful rotation into consumer or pharmaceutical names. Instead, investors broadly reduced exposure to China's AI supply chain, mirroring concerns spreading through global technology markets. Japan followed the same global script. The Nikkei 225 dropped 2.33% to close at 68,831, as semiconductor stocks extended the worldwide retreat sparked by Wall Street's chip rout. The biggest casualties came from semiconductors. Tokyo Electron, one of the world's largest chip equipment makers, fell 7.03% to 73,260 yen. Kioxia Holdings, Japan's NAND flash champion and one of the year's biggest winners, tumbled another 14.27% to 75,550 yen, as investors continued taking profits after its spectacular rally. One bright spot was Mitsubishi UFJ Financial Group. Japan's largest bank rose 1.82% to 3,306 yen, as higher interest rate expectations continued supporting financial shares, making banks one of the few defensive havens in Tokyo. Today's message from Northeast Asia was unmistakable. The market was no longer questioning individual companies. It was questioning the pace of AI investment itself. Memory chips collapsed in Korea, AI hardware sold off in China, semiconductor equipment and memory stocks sank together in Japan. The next question is whether this becomes a healthy correction after an extraordinary rally or the beginning of a broader reset in global AI valuations. That's your Northeast Asia market close for today. We'll be back tomorrow to see whether buyers return to the semiconductor sector or whether today's AI-driven sell-off gathers even more momentum. Until then, thank you for watching AJP.